Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Baker Hughes Co. quarterly report. Baker Hughes Company offers a diverse range of businesses and services across the energy and industrial value chain worldwide. The key areas include oilfield services and equipment, OFSE segment, plus exploration, appraisal, development, production, rejuvenation and decommissioning for onshore and offshore oilfield operations, plus drilling services, drill bits and drilling and completions, fluids plus completions, intervention, measurements, pressure pumping and wireline services, plus artificial lift systems and oilfield and industrial chemicals, industrial and energy technology, IET segment, plus gas technology equipment for mechanical and electric drive applications, plus turnkey solutions for compression and power generation applications, plus rack-based vibrating monitoring equipment and sensors, plus integrated asset performance management products, plus inspection services, pumps, valves, and gears, plus precision sensors and instrumentation, and condition monitoring solutions. The significant increase in Baker Hughes Co. stock price by over 29.28% in the past year can be attributed to a combination of factors. The company's strong financial results, including beating analyst expectations for adjusted earnings per share, EPS, and revenue in 4 consecutive quarters, have contributed to this growth. Additionally, strategic contract wins and an expanding presence in key energy technologies such as liquefied natural gas, LNG, and decarbonization solutions have also driven the increase. Notable contract awards include a multi-year agreement with Petrobras for offshore stimulation vessels and a partnership with Woodside Energy to advance carbon capture technology. Furthermore, partnerships with major players like Petronas and BP have solidified Baker Hughes' position in the energy sector. The company's ability to adapt to changing market demands and its commitment to innovation have fostered investor confidence, ultimately leading to the significant increase in stock price. Net income and profit margins decline. A closer look, the financial summary, reveals a decline in net income and profit margins for the company. Net income decreased by $80 million from $1,817 million in 2024 to $1,737 million in 2025. This decrease is reflected in the net income margin, which dropped from 4.45% in 2024 to 4.37% in 2025. The primary reasons for this decline are attributed to a decrease in operating income and an increase in operating expenses. Depreciation and amortization increased by $17 million, while stock-based compensation costs remained relatively stable. Additionally, the change in fair value of equity securities resulted in a significant loss in 2024, but a gain in 2025. Furthermore, current receivables decreased by $567 million, and inventories increased by $82 million, contributing to the decline in operating income. These factors collectively led to a decrease in net income and profit margins, highlighting areas for improvement in the company's financial performance. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from the operating cash flow section shows that in 2025, the total operating cash flow was $626 million. Furthermore, the net cash flows provided by operating activities for both 2024 and 2025 were substantial at $2,142 and $2,148 respectively. These figures demonstrate a strong ability to generate cash from operations, indicating a healthy financial position for the company. The company's financial summary reveals a stable debt profile. The long-term debt has remained relatively unchanged, increasing from $5,970 million to $5,988 million between 2024 and 2025. Similarly, short-term debt has increased slightly from $53 million to $68 million over the same period. Notably, interest expenses have decreased by $2 million in 2025 compared to 2024, indicating a slight reduction in financial obligations. Overall, there is no significant change in debt level or interest expenses mentioned in the report. The company's financial performance was mixed across its various segments in the recent quarter. The drilling and evaluation and production chemicals and services segments stood out as top performers, generating significant revenue and operating profits of $2.3 billion and $434 million and $1.5 billion and $244 million respectively. In contrast, the digital solutions segment struggled to match their peers' success, with a lower operating profit despite a substantial revenue of $1.4 billion. Management's outlook: focusing on digital transformation and strategic growth, the company is shifting its focus towards digital transformation, innovation, and sustainability. This strategic pivot aims to drive future growth and competitiveness. Additionally, management has prioritized acquisitions as a key driver of expansion, with the recent acquisition of Chart Industries, Inc. for $10.8 billion in July 2025 being a notable example. The company has a history of rewarding its shareholders through dividend payments. In the past year, it paid out dividends of $0.69 per share in September 2025 and $0.63 per share in December 2024. The total amount distributed as dividends was $227 million in Q3 2025 and $628 million in 2024. In addition to dividend payments, the company has also been actively buying back its shares. In 2025, it spent $384 million on share buybacks by September 30th, with a similar amount allocated for the same period in 2024. The company's commitment to returning value to its shareholders is evident through these actions. That concludes the financial summary for Baker Hughes Co. Feel free to comment below, and I will be happy to answer them when possible.